Okay, hello everyone and welcome to the Australian Property Chat. Now guys, George Markoski, Positive Property, and welcome. Now, I know a lot of you watch this, watch the replay, and most of you actually do. So what I'd like you to do, if you're watching the replay, just put hashtag team replay, just so I know you're watching. If you're live, just say, hey, hello, I'm live, because it's great to say hello to you. And today we've got an interesting show on today. So where we are at the moment, we are live in Australian Property Chat, our Facebook group. That's where you can interact. So if you're there, please say hello, type in the chat, just to make sure that I'm not talking to myself, which is pretty good. So there we go. So I'm just going to say hello to everyone and start this off. Interesting. So what I'm going to do is I'm going to start off with the news at the moment. And look, fascinating news at the moment. Very fascinating, which is interesting. So if you saw the title, that Australian house prices have grown the fastest they ever have in the last 23 years. And what does this mean? What does it mean? Well, there's a lot it means, but basically, this is what it means. It means that the rebound I've been talking about. See, what happened was, if we go back, the light on, yes it is. If we go back to the GFC, back in 2008, there was a GFC. And what happened during GFC is a lot of things happened, but there was quite a few people that lost money in property. And then when the COVID pandemic hit, which is once in a 100-year moment, once in a 100-year thing, everyone was scared and thought the same thing was going to happen. Now, including myself, I thought there might be a little bit of retraction in the market, and there was in Melbourne. And we didn't know how bad or good it was going to be, so that's what happened. But this is the interesting thing. After GFC, where there was a retraction in the market, a lot of people lost money in the market got retracted, there was a massive upswing straight afterwards, and property price went up quite a bit. That's where we had the 2010, 11, and 12 massive increases, and that's where people made a lot of money, especially in Melbourne and Sydney, made heaps of money. So what's happening now? Well, fascinating is the fastest they've grown since last month was back in 2003. That's how long it's been, which is 18 years, actually, not 23 years, right? So we've got one big tick. What happens next? Well, this is what's going to happen next. And you look at 2003, for example, it's fascinating. So 2001, 2, 3, what happened was 2001 started booming, and then we had the massive growth in 2003. 2003 was really massive. It kept growing. 2008, bang, we had a crash. Then we had 2008, 2009, nothing happened. 2010, suddenly everything went up again and went crazy. And now suddenly we're looking at the same thing happening again. So look, Mark Twain says history doesn't repeat, but it certainly rhymes. That's the fact of it. And it's certainly rhyming at the moment. So what I'm going to do is I'm going to just have a look and see where we are and make sure that I can see myself on the property channel. So I'm doing this on my own at the moment, guys. So if you got any questions, type them in, because you're going to be able to get some really good help today when it comes to property. Okay, So what's happening in the property market? Like I said, it's going up, and now I'm going to go through the questions that people asked and go through that. Some people have been asked some questions, so let's have a look here. Okay, so increasing your servability to infinity and beyond. A question. How do you increase your servability? Well, increasing your serviceability is quite difficult, quite challenging. And basically what we need to do that is we need to continually refinance, look at what's happening in our property portfolio, and just fine tune it. I'm just going to pour myself a drink while we do this. Yeah, so serviceability is a combination of your income, combination of your equity in your property, and also a combination of the bank policies. So funny enough, to increase serviceability, sometimes all we're going to do is fine tune our interest rates or just change banks, and it can happen. So it's a bit of an art, bit of a science to do that. So, hi George, good afternoon. As a 10 years renting history, does it make any sense in approval application loan? Worth checking. So what this person's saying is they're saying, okay, so if I've got 10 years rental history, is that going to help me? Not necessarily. You do need 10 years of history, but usually most people have got 10 years of history renting somewhere, and that's all that matters. So it's not a huge help because most people have got that, unless you haven't been out of home for 10 years, and then means you're living at home. So not going to help that much either. Yeah, so basically what I want to talk about today is what the rich do and how they create income and how the poor miss out. And this is all about so you've got two types of tax. You've got tax to get taxed on your income, or you can use your income pre-tax, which works better. I'm just going to check this heater because I think the heater's on. I'm getting hot. Yeah, so basically what happens is the rich, they know how to use the tax dollars. Because what happens is your own occupier is probably the most expensive thing you're ever going to buy. Robert Kiyosaki, he says that your own occupier is not an investment.